Perfect. So, yo, what is up for y'all on the YouTube replay? I hope you're having a great day. I'll start off by saying RIP Charlie. That video I watched was so sad. Please don't look up the video, it'll leave a mental scar. But anyway, let me give you a quick portfolio update because the market's at an all-time high today. Congrats if you own stocks, because if you're in the right companies, most likely some of the stocks in your portfolio are most likely at an all-time high today, or very close to it, like a 52-week high or something. But check this out. Here's us year to date. We're up 16.7% year to date. And if we compare that to the S&P 500, the SPY is only up 11, or only, this is great, 11.52% year to date. So we're doing a bit better than them. And that's because we just individually pick stocks. And actually, fun fact, every stock in here is in the S&P 500. So, yeah, they're all also dividend-paying stocks. So every stock in here does pay a dividend. We are up on every holding in here, as well as our Roth IRA is doing pretty good. The past week, we're up 11%. This is our kind of growthy Roth IRA. It's legit exactly a year old, just over a year old exactly. It's only worth $2,000. But here are all the stocks that we own in here. InnoData has been on an absolute tear. We're up 80% on them, and all the other stocks we're down on. Oh, except Main Street Capital. Yo, anyone heard about Main Street Capital? It's one of the few monthly paying dividend stocks. Hey, what up, Juan, JVM? V, what's up, dude? Crazy to see all the green. I know. The reason the market is so green today is because we had a CPI report, an inflation report, and then it actually came out a little hot. Inflation was higher than expected, but for some reason, I haven't done too much research into it, but for some reason, the market's up anyway. So we're also at an all-time high today in this portfolio. I've never been over 24K before. We're nearly up at $9,000 all time, which is great news. And then finally, we have our Webull portfolio. All time, we're only up 17% in here, but we're having a great day. What's up on the day? Dave is up, Futu, PSIX is a kind of diamond in the sand, I like to say. Sprouts Farmers Market. I think Sprouts Farmers Market's at a good price. SoFi's up 3. Robinhood's up 2. So yeah, great pick with Google. Yeah, man, Google. I think there's even more upside potential with Google. Let me go back over here and show you my position with them. And I haven't sold a single share ever of Google. And we got a little pending dividend from Google. So again, they have a really small dividend, but they really make up for it because of how much they appreciate in stock price. Like we're up 48% all time in here. Let me go to yeah, man, I miss these days buying Google at 150, 148. Bring me back to those days on Google. Yeah, we've owned them for about actually a year and a half pretty much. There's our little dividend history. Again, the share buybacks really make up for it in the future growth. So yeah, Google, I'm going to go over them really quickly. I'll show you why they deserve to be at an all-time high and why I think they're going to continue to climb up to new all-time highs, most likely going to $250. So I wouldn't maybe sell. This is a stock, even though they're at all-time highs, I would never fully sell out of this stock. I'd maybe trim them a little bit, which I wouldn't even advise doing, but I wouldn't fully sell out of Google because they're at an all-time high and they're trading at 25 times net income. I feel like this could go up maybe to like a 28. Like this isn't like extremely overvalued, 25 times net income. Check this out. The cloud business they just gave really good news about the future cloud business. Actually, if I go to the news down here, it does like a little AI news breakdown. But Google Cloud reports $106 billion contract backlog. Isn't that crazy? And like 56% of the backlog is going to be converted through 2027 or something. Anyway, the sales are up 13%, net income's up 20%, so they're expanding their net margins. I mean, Google legit makes 25 to 35 billion of net income a quarter. And what is Google doing with basically 25 to 30 billion in net income a quarter? Well, they legit spend, because they're too big. Remember, Google's so big, they're a monopoly. They already have the DOJ case. They're too big to acquire a company. They wouldn't really allow that. So they just spend all their money buying back their own shares. They legit spend 13 to 15 billion a quarter solely buying back their own shares, and you get a nice yield. Yeah, this Google Cloud business is going to be a bigger portion of their business. Check out the growth rates in the middle here. I mean, Google Cloud is growing. They're like an ETF in one. You get YouTube, you get Android, the Google Play Store. I mean, Waymo is pretty good. What platform do you use? Yeah, hey, if you want to get this app I'm on, it's actually a broker where you buy stocks. It's in the link tree in my bio, the first link there. Hey, thanks, V. Appreciate that. How's it going, RG? Good to see you. Unboxing. Hey, what's up? ICHR. What is this company? So, Icore Holdings. So this company, let's see how they're doing. So they're up 6% on the day. They reported earnings. They initially fell, but then they recovered a lot of it. Let me see how they're doing actually. So, um, yeah, this is I like the growth here. The sales are up 19% year over year, but do beware, they are still losing a bit of net income a quarter. I don't like that they're a net income negative company. It looks like the trend was getting better, then it got worse. They lost 10 mil, but I really like the sales growth here. But I think it's because they're still net income negative. That might be why the stock is. The analysts were expecting much higher EPS. You can kind of see the orange lines, what the analysts expect. They were missing on, but they beat on revenue, but they missed on their net income numbers. So anyway, maybe they've oversold that one. I don't know. Do you still DCA Google? Not at this price. For at this point, I'm not too enthusiastic about buying more Google shares. I mean, I'm up 48%. And I over 230 bucks. I think it's tough to really put meaningful money. So what up unboxing? He says Apple stock. And what is your cost basis for Coke? So this is actually the bottler. It's not the normal Coca-Cola that everyone knows that Warren Buffett owns. This is only a $10 billion company, but my cost basis is this purple line here. It's at $111.70. Pretty cool. So, yeah, let me go for Apple stock. Apple stock. Let's do it. So again, another incredible Mag 7 company. All right. So, Duolingo. I saw that, Miller's. Duolingo was going nuts today. So, check this out. Apple stock, they're huge, a $3.4 trillion company. So, huge market cap. They did just release the new iPhone. They had their Apple event, and it kind of disappointed investors. Like the stock sold off after the Apple event. If anyone saw that. But yeah, they have a huge 19% smartphone market share. But check this out. iPhone is half their business. Get my water here. Oh, I just brushed my teeth too. That doesn't taste great. Okay. Yeah, the iPhone is 50% of the revenue. And then they have this services business. Like whenever you go spend $100 in the App Store, $30 of it legit goes back to Apple as a royalty. That's all super high margin for them. And it's over 100 billion of annual revenue for them. Ridiculous. It's their highest margin business. Then they have them, they make not super high margins on the hardware, the iPhones and the Macs, the wearables, but it's the services where they collect the high margin money. And here's also why Apple is a bit affected by tariffs, because did you know only 36% of Apple's revenue actually comes from the US? I always thought it was more than that. 25% comes from EU, 18% China. So yeah. Also, Apple's another company that deploys all its money straight into share buybacks. You won't believe this. They spend 21 to 25 billion of their after-tax net income every quarter solely buying back their own shares. So Apple is just an absolute buyback monster. The net income's up 9%, but the net income per share is up 12. So I really like Apple. All right. So guessing people saw the Charlie. Oh yeah, hey, RIP, man. That was so sad. I watched this. I shouldn't even say. I watched this like close-up video on Twitter, and it just like it mentally scarred me. That video was so gross. Please don't look it up. It's like legit left a mental scar in my head. I Okay, is Oracle good? Let's check it out. Remember, they had an incredible earnings report yesterday. They are down 6% on the day, probably just because just a little relief rally after monstering up 40% yesterday. But Oracle, check this out right here. What website is it using? Yeah, hey, JEI. This is it's in the link tree in my bio. The first link here. It's actually a brokerage where you buy stocks and stuff on. It's my favorite one. But yeah, anyway, my favorite software. But anyway, check this out. This is the actual earnings Oracle reported missed. Like they missed on revenue, they missed on net income, but it was the future billings growth. The billings were up like 355%. Huge beat. They're opening up like 37 new data centers. They're going to be buying a bunch of NVIDIA chips. That's why the whole AI ecosystem went up after that news. But yeah, the cloud and licensing revenue is growing nice, up 14% year over year. Nice. But yeah, I'd be careful at this valuation. Okay, CoreWeave. Let's check it out here. So, how's Comfort Systems doing? Okay, they're falling a bit. Hopefully the market's not falling. Let me check real quick. Or maybe I shouldn't check. I don't want to. Okay, no, actually, the QQQ is doing great right now. Yo, congrats if you own stocks. The market's at an all-time high today, so your portfolio has to be doing at least somewhat good. If you're in the right stocks, a lot of them are at all-time highs today. All right, so CoreWeave, that's a company in the AI ecosystem. So if we go to the NVIDIA portfolio, which we can view, which is pretty cool, um, if it would load, maybe it won't because I just booted this up. But okay, there we go. NVIDIA portfolio. Check this out. So NVIDIA has to make all their holdings public, and one of the stocks they own, it's their largest holding, is CoreWeave. I think they own like 8% of all the shares or something. But yeah, CoreWeave was up massive yesterday after Oracle was up massive. One thing I really liked about CoreWeave is how much they're growing the revenue. So check this out. Exactly a year ago, the revenue was 395 mil. Now it's 1.2 billion, a 3x increase. This was a record quarter, 1.21, and analysts are expecting in 2 quarters for it to be 1.8 billion. So this is a super growthy business, but one thing I don't love about CoreWeave is the fact that they're burning through a lot of net income, a couple hundred million a quarter, and analysts are expecting them to continue to lose a couple hundred million a quarter. But analysts expect this, so it's like nothing new. It's not like a huge surprise. So yeah, I like the growth there, and Nvidia owns a lot of them, but I, in the long run, they do kind of hold the bag. Do you trade crypto? I actually do not. I don't own any crypto at all. I kind of regret that because a lot of crypto is doing great, like Bitcoin and Ethereum. Okay, what up, JD? He said Uber stock. Let's do it. So I love Uber. Actually, I think this is a perfect like buy and never sell company. So Uber's at an all-time high today. They're a $200 billion company, and here's why they deserve to be at all-time highs as well. Oh yeah, I forgot. Check this out. This is their monthly active consumers. So not just monthly active users, but the people who consume their service, it's 180 million when the same time last year it was 156 million. So it's continuing to grow. Yeah, hey, David, what app is this? Yeah, hey, again. It's in the link tree in my bio, the very first link there. It's actually a brokerage where you buy stocks on. So it's a broker. If you want to get it, link tree in bio, first link. Or you can just type it into Google. It's a brokerage called Moomoo. So anyway, Uber stock, check out the growth. Like, this is the ridiculous part. Look at that. This is what FCF stands for. It stands for free cash flow. They're printing money. It's at a record free cash flow this quarter, 2.5 billion. I mean, they're making easily over 2 billion of free cash flow every quarter. And not just free cash flow, but after tax net income. They're easily making over 1 billion in net income a quarter. And check out these growth rates, these year-over-year growth rates. What's it going to be this time next year if they're growing like a maniac like this? So anyway, they're improving their margins. It's ridiculous. I really like Uber. Oh yeah, we can see their revenue by breakdown, like the delivery revenue. Uber Eats, that's up 25% year over year to a record. So wow, I think that's a great never sell stock. What up, Mansoor? He said MU Micron. Let's do it. Then we can look at AbbVie. Yo, I love AbbVie. They're at all-time highs. And hey, Larad, thanks so much for the rose. I really do appreciate that. So here's Micron Technology up 9% today. Yo, congrats if you own this company. They're pretty much at an all-time high. I mean, just a few percent off all-time highs. And even though they're at all-time highs, they're only trading at 27 times net income. So they're trading at a pretty fair PE. Let's see, their compute and networking business, yeah, is growing insanely. It's up 97% after growing 85%. So that business is at a record. Let me see what they actually reported. So yeah, they beat on revenue by a pretty good chunk. They beat on net income by a good chunk and EBITDA. So it was a triple beat quarter. I could totally understand why this stock is at all-time highs. Yeah, 1.9 billion net income. I remember it was a tough buyback here. They were actually losing like 1 billion in net income a quarter, but now they're consistently making a lot of profits. Great news. And you get a nice yield of 0.3% dividend yield. So nice. Yeah, they triple beat on earnings. I'm not surprised they're at all-time highs. Yeah, ticker symbol Hive, that's not a great one. That's like a Bitcoin adjacent one that just doesn't keep up with the price of Bitcoin. The Bitcoin mining companies, for some reason, just never keep up with Bitcoin. I haven't seen a single one do it. Clean Spark, what are they all called? B- forget the names of them just because I don't care. But anyway, here's AbbVie. I might check it out though. Here's AbbVie. This is a healthcare company. They sell a bunch of different prescriptions. I think like there was some news. Actually, here's a good way to check the news. It should show it down here. Yeah, they secures the Rinvoq patent settlement. and expands the manufacturing. So pretty good. That's great news. But anyway, this company's at an all-time high. I wouldn't really buy them at all-time highs, but they have a very sustainable 3% dividend. So if you're just looking for a stock with a pretty decent yield, a 3% yield that's safe in my opinion, I'd get this company right here. It's a healthcare one. They're kind of like a mini Eli Lilly. Check out Sky Rizzy. It's a huge growth driver for them. Like legit, look, these growth rates are ridiculous. This is why the stock is at all-time highs. It's up 62% after going 45, after going 50, after going 63, after growing 100. So the growth is ridiculous for Sky Rizzy. And here's the company they just settled their patent on. It's a huge chunk of their business, 13% of all the sales, and it's been super growthy for them, extremely growthy, man. And and now they're going to continue to sell this and be exclusive. So that's up 41 after going 55, 55. So incredible growth on AbbVie, sustainable 3% yield. I really liked them. All right. Um, let's see. What up? What do you think of RZLV? Just closed a win with a 70% gain. Yo, that's crazy. So glad for you. Wow, check that out. Yeah, they've been on an absolute tear the past couple days, really. So I believe this is still a revenue-less company. I wonder if there's any like specific news. I think it might just be a just momentum right now because check this out. I believe it they're revenue list. So if we go to their sales right here, yeah, for the entire year of 2024, the sales were 180,000 for the entire year. I'm sure someone in here probably makes more than that a year. And if we go to the net income, they're actually they for the whole year making that 200,000, they lost 172 million of net income. They have twice as much liabilities they do assets. I mean, from a financials point of view, I'm not seeing anything good, but that's kind of the same with a lot of stocks right now. They're super momentum-y, markets at all-time highs. And that's something that looks like a fun trade, but not like a buy and hold for the long run kind of stock. Someone said TWST, please. You know what? We'll check it out. So this is a $1.5 billion company, Twist Bioscience. Unfortunately, the stock is pretty much at an all-time low. They're the same price as they were back in 2019 or when they IPO'd. So let's see. Next generation sequencing. Well, that business is growing very nicely. It's up these growth rates look great. So that business is growing. Synthetic genes, that's growing nicely as well. Hold on. Let me see down here what the total revenue is. So revenue's up 17%. The net income was that real though? Okay, so they didn't actually make net income. They really lost 30 million, but still it's headed in the right direction. 31% improvement from the previous year. They do have a good balance sheet. ARK Investment, I know they love the gene splitting companies. Like they own oh, I don't remember the name any off the top of my head. I should let me go to the Kathy Wood portfolio and just see what it was called. She owns CRISPR Therapeutics. That's what it was. I think that one's revenue-less, but pretty interesting. I like the growth on that one. Aryan said FICO is such a value right now. You'll like looking at it. Oh yeah, FICO score. Yo, they're up nicely. So the reason there was all this, volatility back here is because the government was basically making a competing product to the FICO score. They basically had no competition for the score business, but the government's making a new score and it was hurting the stock. But I think they oversold it, or that's what's really looking like now. The score business is huge for them. Like that little FICO score, whenever you make a big purchase like a car or a house, you're paying like a couple dollars for your FICO score. They've had tremendous pricing power because it doesn't matter if you're buying $1 million house, you don't care if you're paying $5 or $8 for your FICO score. So yeah, it's nearly $1 billion of annual revenue for them. You can see it just grows every year. 2019 it was 400 mil. Now it's 900 mil. It's doubled. So yeah, and the net income's really good as well. Net income's up 43%. They're making it's improving at a very nice rate. So yeah, FICO, they're interesting. I do really like them, but I know the valuation is a bit high. Ooh, Snowflake. Hey, let's check them out. So Snowflake, this is a Palantir competitor. They reported earnings and they lost less net income than expected. So one thing investors are heavily watching around the stocks, the fact that they burn through cash. They're losing like 300, 400 million a quarter, but they actually lost net income than analysts expected. They actually beat on every metric. They had a nice beat on revenue, nice beat on EPS and on EBITDA. So it was a nice triple beat. I mean, 40, 50% beat on the EBITDA. So The growth of the sales is crazy. Sales are up 31 after going 30, after going 40, after going 80. They had their first ever $1 billion quarter. So incredible growth on Snowflake's just quarterly revenue, product revenue. So I do like them. But we were gonna watch those net income numbers. Hey, Adrian, things look very green today. Absolutely, man. We're at an all-time high today. Pretty nice. So, Eric, what's up? He said, "Can we look at TPL?" Yeah, so this is a like land royalty company. They basically own like a bunch of land in Texas, and they allow companies to like use it for its resource rights, like the water rights and the oil rights in Texas. And they basically collect a lot of high margin royalty streams, I believe, as part of their business. So yeah, they that's how they have 90% gross margins and 62% net margins. Very high margin business for for a typical oil stock. They're not like your or what I meant to say was they're not like your typical oil stock. Sales are nicely. They're making a nice net income. Over 100 million in net income every quarter. Very nice margins. 187 million of revenue and 120 million of it is after tax net income. They also have a fortress of a balance sheet, no debt at all, debt free company, $600 million of cash. That's a huge, it gives them a lot of freedom, no debt on the books. Pretty cool. So TPL, I do like them. I do like them. The valuations that might be a bit high though. What up, Celery? He says, bought RCAT yesterday. Hey, should we check out RCAT? I think that's like a drone play. I remember, I think, looking at them, I didn't find anything too valuable. Or let me just reanalyze them. So they're a $1 billion company. So the whole company is worth $1 billion. Red Cat's Black Widow drone gains NATO procurement approval. So basically, they can sell their new drones to other NATO members. And wow, okay. Here's the thing. The next 2 quarters are crucial for RCAT as they transition from a revenue list company to finally making revenue. Because if we go to the revenue right now, it was 3 million in the most recent quarter, down 18% year over year, not great. Only 3 million. But according to the analyst, it's expected to be 25 million next quarter and then 45 million. So really watch the next 2 quarters for RCAT. I'll actually put them on my watch list. Yeah, Red Cat's Black Widow drone, gets approval for NATO. Okay, cool. So that's RCAT. They're like a drone play. They do lose a bit of money, but the sentiment looks good. And I think the next 2 quarters are worth watching and holding into. Neogenomics Inc. Hey, is that like a Tempest AI competitor? So yeah, Michael, there's Red Cat. Pretty interesting. Singleton, he said Nebius. Hey, another company in the Nvidia portfolio. So if we go to Nvidia's holdings, we can see one of their holdings is in Nebius, and Nebius just got a huge partnership with Microsoft. Yeah, Nebius signs major $17.5 billion GPU infrastructure deal with Microsoft. Incredible. And that explains the rally yesterday or 2 days ago. They were up like 30-40% in a day. And here's the one thing I have always loved about this stock. Just because Nvidia owns a stock doesn't mean you should own them. Always go do your own research, see if you like the financials. And when I look at their financials, I've seen a lot of stuff I like because the revenue legit went from 14 million the same time last year to over 100 million in the most recent quarter. I mean, this was a record quarter, 105 million of revenue, up 7x from the previous year. They are still losing net income every quarter, so do beware of that. They are still net income negative, but yeah, it seems pretty interesting after the Microsoft deal. All right. What's this app? Yo, Baldwin, what's up, man? So this is actually a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It's my favorite one. Lowest fee, most useful brokerage. I also have these ones linked up there as well. If you wanted to get Webull or Robinhood. But, my favorite one and most useful one, lowest fee one is really this one right here, Moomoo. So yeah, if you want to use my affiliate link, I'd appreciate it. Link tree in bio, first link, or you can just type it into Google. Just a broker called Moomoo. So anyway, let's keep going here. And oh yeah, and of course they added the new feature. You can track the super investors portfolio, like Nancy Pelosi, yo. They have to make all their trades public by SEC law, and we can see her exact holdings and her exact weightings and her performance versus the market and stuff. So yeah. Anyway, let's keep going here. Hey man, what do you think? Red Cat is very interesting as well. I thought of buying it. I'm about to buy more SoFi as well. Hey, what up, Sludgy? So let's do SoFi stock. I also own this company. They've been one of my best performing stocks. Uh, yeah, hey, Primetime, what's your top growth company? Well, one of my top growth companies is SoFi. I'm up like 300% on them. It's been an incredible performer. They've beat even my expectations. And I regret every share I've ever sold in them. I have lost, or I did sell some shares at a much lower price than today, which I do regret, but I still have like 25 shares left. But check this out. Here's the part that really has led to a lot of the stock price appreciation, because if you look at the financials, it usually explains why a stock is doing so good. And this is the part that really is insane. The financial services revenue is up 105% year over year after growing 80, after growing 222. Like the revenue hits a new record every single year, every quarter. They just created it out of nowhere in 2020. It was 2-3 million of revenue. Now it's 360 million just this quarter. And also the lending side of the revenue, that's up 30% year over year, also to a new record. People are just really starting to take them serious. Revenue's up 42, and out of that 800 mil of revenue, they made 100 million of after-tax net income. They're net income positive every quarter. So SoFi is really great. I'll show you my position in them actually, if anyone wants to see, if anyone cares. Yeah, there it is. I got 24 shares of SoFi left. But yeah, I bought them years ago. I think, yeah, right here is where I bought all my SoFi. So anyway, they've been a great buy and hold. I regret every share I've sold in them. All right, so can you look at the SCHD ETF? What up, William? So yeah, SCHD, this is like a dividend growth or a dividend oriented ETF right here, because you get like a near 3.8% yield. So you're getting nearly 1% of your money back a quarter, and it owns a lot of the higher yielding names that are like big market cap. Some of probably like the actual safest higher yielding names like Chevron, AbbVie. I love AbbVie. They're up 4% on the day. Mo, they have a sustainable like 6% yield. Home Depot, Pepsi, Merck, ConocoPhillips, Cisco. Ever since the Splunk acquisition, I do really like Cisco. They brought the growth back. So yeah, I do like SCHD, but you don't really expect them to outperform the market in the long run. Yeah. What's your play before the Fed meeting? I'm not really doing much. My play for the Fed meeting is all my growth stocks. Hopefully they'll rally up in a lower interest rate environment. Hey, what up, John? I'm doing great, man. How about you? How was lunch? All right, so Keenan said CATL. Let's do it, man. CATL. So this is okay. I'm surprised I found it. So I'm glad this app allows me to view this stock, because so this is a Chinese company. So we're going to convert the revenue to USD just to view them easier. But it looks like the stock's done very well. So you must be up a good chunk on your money here. They're trading at 25 times net income. They own patents. Patents. They have 12.8 thousand patents, up from 6,000. Power battery systems. The revenue has grown very nicely. And it looks like the revenue is expected to continue to grow. They're making a lot of net income, and this is in USD, over $2 billion in net income a quarter. So they're Chinese and you're paying some ADR fees, but looks like some battery. They seem really interesting. Surprised we get this metric. Patents. 12.8 thousand of them. Pretty cool, actually. Thanks for that, Keenan. Yeah, hey, we're at it. Today's a great day. Yo, congrats if you own any stocks. The S&P's at an all-time high. And you're right, John, we're at an all-time high today as well. Powell Industries is doing great. They're up 5%. Coca-Cola Consolidated is doing great. Amazon's doing decent. Amphenol, all-time high on Amphenol. All-time high on Comfort Systems as well. So pretty great day for my buy and hold portfolio. Okay, so CLSK and Celsius. Ooh, yeah, Celsius is pretty interesting after the Rockstar acquisition and the Alani acquisition. So, and the Pepsi stake. So here's CleanSpark. This is a Bitcoin mining company, and what I really see with these Bitcoin mining companies is they don't really keep up with with the actual Bitcoin. So yeah, if we look at where the revenue comes from, 100% of it comes from Bitcoin mining. And hey, tags too. Thank you so much for the little rose there. I do appreciate that. So yeah, you really just look at the market cap and the net asset value of the Bitcoin. I just, fortunately, like this one's over 70 or 60% off all-time highs. Bitcoin is doing great since 4 years. So I can't really recommend them over Bitcoin. Probably just want to own what they hey Gonzalo, what app is this? Yeah, hey, if you want to get it's actually a brokerage where you buy stocks on. Link tree in my bio, the very first link there. My favorite software, my favorite brokerage. What up? Chloe plus Gucci. What's up? LDI jumped another percent. Yeah, these mortgage companies are doing great. Like Open Door Open Door is not a mortgage company, but they're really momentuming right now, just like Loan Depot. So yeah, these are just momentuming on the lower interest rate environment, hopium, which is most likely going to happen. Well, there's a 90% chance of an interest rate cut this month, which is pretty good for let's say a Rocket Mortgage is doing. RKT, Rocket's up 5% today. And let me look at Open Door. I would stay away from Open Door. Yeah, they're up 75% today. I'd be super careful with Open Door. I wouldn't touch that one unless you're trading it or something. But yeah. CLSK might be changing to high-powered computing that might change future. So they're diversifying away from just like a Bitcoin mining company. That's interesting. Really liking gold plays, Seabridge and Newmont. Oh yeah, if we just look at gold right here, IAU is the ticker symbol for gold. If you got any gold chains, gold jewelry you don't want, maybe go hit up the pawn shop and sell it for cash because gold's legit at an all-time high pretty much. Like whatever it was worth a year ago, it's worth 50% more. So maybe go buy some stocks for that money. Yeah, again, none of this is financial advice. I'm not an expert. I sell nothing. I have no course book. Watch out for people impersonating me. I'll never follow you or DM you or nothing. So if you want to hit the follow button, though, we do stream every day. All right, so NVO, what's up, Fork? He said Novo Nordisk. This is the weight loss company. So if we look at this right here, they 93% of their business is in the diabetes and obesity care products. And they legit own Ozempic. Elon Musk takes Ozempic. And they also own Wegovy. And they make a lot of money. They're making easily over $4 billion of after-tax net income a quarter. Oopsie. You get a very strong yield, 3.3% dividend. They raise it every year. One reason the stock has kind of it's well off its peak is because they do lose their exclusivity for Ozempic. In a couple years. Also, Novo Nordisk announces a global restructuring with 9,000 job cuts. Hey, these job cuts could help Novo Nordisk's bottom line, but that's not great news because that means they don't have like future demand. Anyway, that's why they're trading at such a industry average, like so low toward the industry average. So they're interesting. It's your weight loss company, yeah. Weight loss and insulin, yeah. Diabetes and obesity care. Hey, what up, Matthew? He says, what's up, Astera Labs? Let's do it. Yo, this is a stock that just deserves to be at all-time highs. Usually, if you're ever looking at a stock and you see they're at an all-time high or in an all-time low, like Lucid is, if you just look at their financials, it usually explains why a stock is doing so good. That's why I like looking at the financials so much. If you notice, we don't do much technical analysis. We mainly just look at the financials because check this out. Here's why Astera Labs is at an all-time high. They're beating like crazy on the analyst expectations. The sales are up 150% year over year to a new record after growing 600% from the previous year. So, like legit in 2023, this was a revenue-less business, doing $10 million of revenue. Now it's nearly $200 million of revenue this quarter. And out of this 190 mil, they made 51 million of after-tax net income. So very good net income positive numbers. And at this, growth rate, what's it going to be the same time next year? And they also have an absolute monster of a balance sheet. Astera Labs has legit no debt at all and over $1 billion of cash. Their cash pile's growing. They have no debt. Let's see. They're making interest on their cash. They made 11 million of interest on their cash since they have no, a lot of companies are paying negative debt interest, but they're making interest on their cash. They're keeping it in the 1 to 3 week treasury bills and or milk a little bit of interest, and the free cash flow looks ridiculous as well. So anyway, Astera Labs, financially they look fantastic. I don't know. I'm not too happy about that valuation here. I don't know if I'd buy them. I certainly probably wouldn't buy them with a significant amount of money at this price. They are looking a bit pricey. AIRI, they recently secured a new contract. Let's check it out here. Wonder if we get news down here. Hey, you're right. So check this out. Air Industries Group secures a 69 $6.9 million defense contract for aircraft components. So that's good news. Actually, that's half their. Okay, we don't really cover these kind of stocks. But that is interesting. They're only worth $15 million. So that order of 6 million, 7 million is half the whole company's market cap. I wonder what the margins are. So they sell to the military and then commercially to anyone who wants to buy it. How's the military revenue growing? Obviously, they sell to the military. But let's see. Revenue of 12 million, down 7% year over year, losing net income every quarter. So 7 million isn't too I mean, it is half their market cap. I wouldn't touch that one, to be honest with you. They're just so tiny. The whole company's worth 15 mil. That's tough. That is tough. Hey, what up, Lulu? Appreciate that. Y Quar said RKLB, Rocket Lab stock. So this is one of my more favorite space stocks out there. George said InnoData. Yo, remind me to look at InnoData. I have to look at them. I do own them. But here's Rocket Lab. Ever since the Geost acquisition, I mean, I've just been really bullish on this name. I wouldn't really buy them over $45 a share, but meaningfully. But check out the space systems revenue. These year-over-year growth rates in the middle are ridiculous. Like this revenue is at a record. It's nearly 100 million in revenue. So this is at a record. And also the launch services, the other half of their business, launch services is 33% of all the revenue. It increased 60% year over year to 46 million in revenue. It's never even been close to 46 million before. So it was a great quarter. And this sales, they're up 36%. They're going to be even more growthy after the Geost acquisition. I would still be careful though. They are losing a lot of money, 200 million plus of net income a year. But it's okay if they continue to grow at this rate. Okay, top 3 promising stocks. That's tough to say. The most promising stocks are ones I've probably already bought in terms of my own conviction because I own them. But I wouldn't pay a lot of today's valuations on a lot of companies. Like a lot of these, pretty much this whole entire list of stocks here, I wouldn't pay any of these valuations on like Reddit, Robinhood, SoFi, AMD. Well, maybe AMD, but the stocks I do like it valuation wise, and I'm legit just about to buy more of these. Is ticker symbol SFM, Sprouts Farmers Market, their grocery store, and PGR Progressive. They're kind of a nice they don't do so well in a bull market, but it's a nice nice industries to be diversified in. Insurance, grocery store. They have abnormally high margins for a grocery store. I do own 7 shares of them. Yeah, look at them in the past couple of weeks. If you're looking for a stock on a dip, check out SFM. Again, I wouldn't probably make it as a huge position, and again, not financial advice. But I do really like that one. Oh, hey, what up, Brick? He said SNPS. This is Synopsis. They just had, oh, wow, nice little rebound, up 12% on the day. But yeah, as you can see, down bad from their $608 price. I think they gave bad guidance. Let me see if I can find some specific news here. Synopsys expands AI Copilot platform, completes merger with Ansys, and workforce reduction. So they're firing some workers. All right, well, they're in design automation and design intellectual property. All right, that seems niche. They missed on revenue. They missed on net income. They missed on net income by a big bit. They're expected to actually lose net income next quarter. Yeah, I believe this just recently updated. The net income was not like this before. It wasn't projected to go negative next quarter and be barely positive. So that's a huge change in the net income. They're going to be going from making $2 of EPS to 20 cents and then lose 20 cents. So looks like the margins are being whacked a little bit. And it looks like some of the growth came from an acquisition. So I think that's why without that merger acquisition, the sales would have even been less growthy. All right, so Hoping Ocean. I don't. That is not true about RR. I'd be really careful with that one. I found out about Calm the other day from you, and I bought a few shares. Hey, Premium. Oh, remind me to look at InnoData. But this is a pretty cool company. Ticker symbol CALM. This is Calmaine. This is the largest chicken egg producer in the U.S. And again, let me go back over here to this brokerage. It's my favorite one to analyze apps on. And again, hey, Chris said what? Yeah, I think that you were talking about this one. If you want to get this app, it's my favorite one. It's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the first link there. And hey, Pepe, Papai, thanks so much for the roast there. I do really appreciate that. What was I about to look at? Oh yeah, CALM. This is a very niche company. You know, you don't find many stocks like this, and they have had some pretty monster appreciation. I'm up like 20% on my shares when you include the dividend because their dividend is so high. I bought them. Check this out. Their dividend changes every quarter. Last quarter, it was $3.50. That is a 3.5% instant return, or well, it was for me. At that price. So yeah, they have a 6% yield and a conventional shell egg sales. It's been booming, up 92% year over year to a new record. Last quarter was ridiculous. It was $1 billion. Also, the specialty shell egg sales was up 31%. So the business is just booming. Revenue's up 72. The margins are pretty ridiculous for chicken eggs. 30. The margins are expanding. They didn't normally have these kind of margins. But the market, I guess, it's an interesting one. They're making a couple $100 million in net income a quarter. They have no debt at all. Debt-free company. How much cash do they have? $1.4 billion of cash, and the whole company is worth $5 billion. So first off, they trade at 4 times net income. And second off, 25, or maybe a little more, but 25% of the entire market cap of what you're paying, the valuation, is their cash on hand. So really, you can subtract 25% off this 4.42 to do an X cash PE multiple. We could also see what their inventory was like to really see how cheap this company is. But anyway, Calmaine's a chicken egg stock, and that's given me some pretty nice dividends. I do own 7 shares of them. I might be biased, but maybe I can pull up the dividends. But oh well. All right, so let's see. Calvin, how do you like that Oracle move? Yeah, that Oracle move was crazy. They're opening up like 30 new data centers. Zeta stock, ZETA. So not Meta, but we got Zeta stock. So ZETA. So this is Zeta Global. Yeah, they're up 9% on the day. So check this out right here. That's pretty good. I really like the growth on this company, and they're really trending toward net income positivity. The sales are up by 35% after growing 32% the previous year. So sales are growing nicely. And also, they're narrowing their losses at a faster rate than the sales. They narrowed their losses by 55% year over year. They barely are losing any money. They've deleveraged their balance sheet. Like the assets used to be 63%. Or the liabilities used to be 63% of the assets. Now it's only 38%. So the cash flows are great, you know. So I do like Zeta from a financial point of view, and I can see why they're doing well. They had a nice earnings report. What app/website is that? Yeah, hey, again, it's a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. It's my favorite one. So someone said CRDM. CRDM, yo, Eunice, I look up CRDM, I can't find that company. Are you into blue chip cryptos? Yo, I actually don't own any crypto at all, Nemo. I mainly just hold blue chip dividend stocks, dividend growth companies. Or well, actually, not all of them are blue chip. Like a lot of these are very small companies. Amphenol's a nice one though. They're worth $145 billion now. Wow. That's ridiculous. So, all right. Can you do options on? Yeah, of course. They actually have a lot of nice options you can do. Yeah, a bunch of different strategies and stuff. They also have like the unusual options activity. There's none for this stock because they're so tiny. But yeah, I really like them for options as well. I don't do options just because right now I'm just buying and holding stocks for the long run. Okay, Ahmed, what's up, man? Yeah, hey, try not to spam. I appreciate you. Let's do it. LG in stock. Legence Corp. Oh, they're actually an IPO. So this isn't a publicly traded stock yet. They're they're gonna go public at a market cap of 2.75 billion. So do know they are a bit of a small company, worth under 3 billion, but let's see what they do. Engineering, installation, maintenance for mission critical systems and buildings. So HVAC, MEP, that stands for, I believe, mechanical, electrical, plumbing. Yeah, HVAC, that's the same thing. I'm going to put them on my watch list, actually. Thanks for that. That's kind of the same thing that Comfort Systems does. Ticker symbol FIX, my largest holding. Okay. Yeah, hey, thanks for that. Okay, look at company financials. Oh, I don't think they're available yet. Oh, I didn't see that. LGN. You know what? If it's available, we'll check. Okay, so installation and maintenance. Um, okay, so there is history. So the sales are up, again, not much, but sales are up 15. Net income looks choppy. Balance sheet's not great. Again, they haven't raised the IPO funds yet, and usually when they IPO, they significantly increase the balance sheet. Yeah, hey, what up, Short? He said, yeah, hey, oh, CRMD. We'll look at CRMD and then we'll pull up ULTY. All right, so this is Coremetics. This is one of my newest positions. Oh, is the InnoData person still here? Oh, yeah, George, thank you. I'm glad you're here. We got to look at InnoData next. You know what? That'll actually be the next stock we look at. Please remind me. But yeah, check this out right here. InnoData, I do own them. They actually have been on a tear in just 1 week. They're moving like a crypto. Yeah, they're up 64% in just a week. So we are now up 82% on InnoData. But my newest position that I think is going to be the next, well, not the next InnoData, but have similar gains like them is actually CRMD Coremetics. I am down 7.5% on my position, but let me give you a pitch for this stock. I don't normally pitch these kind of stocks, but again, not financial advice. Let me give you a quick little breakdown on why I love this one so much. And again, as much as I love this company, as much as maybe you might like them too, you cannot make them a significant position in your portfolio. Make them like a very small amount, less than a couple percent. So anyway, here's the thing I love about this stock, why I think they're a 3X. Not financial advice. They're a $979 million company. So remember that. The whole entire company is worth $970 million, and they literally have $190 million of cash and no debt. So they have no debt on the books. No, they don't owe money to anybody. They have $190 million in cash. So first off, basically 20% of what you're paying, 20% of the market cap is just their cash on hand. So that's great news. And here's what you're buying. A business that went from selling nothing a year ago, 29,000 to now 39 million, a record amount of sales. And here's the best part. Out of this 39 million of revenue, 19 million of it was after-tax net income. So here's a company that's worth 900 million, $200 million of that is cash. So it's really, we'll just say an $750 million company that's making 20 million of after-tax net income a quarter. And look, the EPS, 29 or 19 million of net income equals 28 cents of EPS. The net income projections are expected to keep on climbing. The revenue is expected to go from 39 million to 100 million. So CRMD from a financial point of view looks very interesting to me. And I actually just made a YouTube video about this stock. If you want to check it out, maybe learn more, see what they do. They're actually transitioning from a 1-product portfolio to 7. They just did an acquisition, which is double-digit accretive to EPS. If you want to learn more about CRMD, watch my most recent YouTube video. It's the 3rd stock I go over in it. The very last one, I spend extra time looking at it. But yeah, my YouTube channel, again, is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert and should be and I'm also streaming on there. Yo, that's the best way to support me as well. Watch the stream from YouTube. TikTok keeps randomly taking down my streams and it's a bit annoying. But the other stock, now, that's CRMD. I try to find a bunch of super growth, companies I think are going to be really growthy here in my Roth IRA. Because if I go to my main account right here, I own a lot of boring companies. I know McDonald's, I guess Google and Meta aren't so boring, but utility company, United Rentals. But those are the boring blue chips. But for my Roth IRA, I'm really trying to be super growthy. And here's my total percent chance on every stock in here. So far, it's only really worked for InnoData and Main Street Capital, which is actually a dividend pair, monthly dividend pair. But the next stock I want to go over is actually INOD. And unfortunately, I definitely wouldn't buy this one over $50. But they've been an incredible performer for me. And check out the past couple candlesticks. Here's why they deserve to be at all-time highs today. They have no net debt, and they're super growthy. 5 of the Magnificent 7 are customers. Meta's a customer. Google, NVIDIA, Microsoft, they're all customers. And the revenue, this is all organic. Like, they didn't acquire a company to get this. Some 99% year over year after going 92. So the revenue is at a record on their digital data solutions. Incredible. This was a record quarter for them, and the revenue is expected to continue to climb up to $70 million. And also, they're making net income every quarter. They're a net income positive company with a fortress balance sheet, no net debt. Free cash flow is positive every single quarter as well. Or here's the actual FCF numbers. So I'm liking financially Innodata, really growthy company. They're all, oh wow, they're $2 billion now. That's crazy. So they're a $2 billion company. That's still not even huge. $2 billion. That's why I'm not selling or trimming my position. I'm not selling a single share of Innodata. I think, $2 billion, they could continue to climb up. So, all right, short. How about we, Carla IPO. Hey, I think you're talking about the Klarna IPO. Yeah, so this is a buy now, pay later stock. What we've normally seen with a lot of IPOs is, they IPO'd at 39, they instantly rallied up to $50, and now they're at 43. Like, they instantly rally up and then they slowly die down. We've seen that happen with like Bullish and Figma and some of the recent IPOs, CoreWeave, Webull. But Klarna, if you're looking for a buy now, pay later stock, this is one. Again, I wish I could give you more thoughts on them, but since they just IPO'd, we don't have much financials. But we can see the sales are up 21% year over year. And in a recession, the buy now, pay later stocks do get smoked. I mean, people just won't pay back those loans. But Affirm is killing it. Another buy now, pay later stock, AFRM, Affirm Holdings. They're now super profitable. They've seen some very nice growth. Do you think Apple will go up? Hey, I think so in the long run. I think Apple's a stock you just want to buy and never sell. Don't really try and trade them or time them. Just buy and hold shares for the long run. Hey, what up, Gent Jan? Probably saying your name wrong, but Gent Jan, thank you so much. I hope you're doing well as well. Let's see, CECO. Let's check it out. So Seco Environment. Wow. Congrats if you own this stock. I mean, they are at an all-time high today. And they're still a small company, a $1.7 billion market cap. What do they do? Engineered systems. That business is up 30% year over year. And the other part of their business, industrial process solutions, is up 31%. So that was a pleasant surprise. They're beating on every analyst expectation, which is great news. Yeah, check that out. So sales are up 34, net income's up 100. Oh, hey, try not to spam here. Hold on. But yeah, they're really net income positive. So that's the good news. That's probably why they're up so much. They're still a $1.2 billion company, hopefully going to be making 10 to 20 million in net income a quarter. Yeah, analysts are expecting the revenue to continue to climb up and hit a record. So pretty cool. CECO, environmental. I'll put them on the watch list. How to buy U.S. company stock at a U.S. global with cross world. Hey, I think you have to buy a US ADR or something. I'm not sure. Failed to add. I'm not sure what that. Okay. I guess they don't want to put it on my watch list. So UPS, should we do UPS? Hey, actually, Pinky, what's up, dude? Let me know if someone else wants me to do UPS. We'll do it. But here's Tempest AI. This stock is bought by Nancy Pelosi. Oh, wait, hold on. Let's check out this news. Tempest AI receives FDA special clearance for updated Tempest Pixel device. Anyway, that sounds like good news. Brainhole Technology. Okay, anyway, let's go analyze them financially. I do really like Tempest AI's growth. I mean, the sales are up 115% year over year to a record. So sales are at a record for this company on their genomics business, which is 80% of the revenue. Then they have the data and service business, which is also at a record, up 35%. These year over year growth rates in the middle, are incredible. So Tempest AI is a beast of a growth company. Sales are up 90%. Do beware, they are still losing net income every quarter, but it's trending in the right direction, and it's really all right with these crazy sales growth. So Tempest AI is pretty interesting. They look a bit expensive here, but I'm not shocked to see them doing so well. I know Nancy Pelosi, I know she owns a bit of that and has traded that one, her and her husband, because they got to make their trades public. Okay, what was the other stock we wanted to look at? Hey, what up, Oscar? Good to see you, man. What's this one? You know what? What up, DYI? He said ZNB. Okay, Zeta Network. I don't think you're talking about this stock, or I hope not, because the whole entire company is worth $1.8 million. I mean, hey, what do you guys say? We let's put the funds together, buy the whole company. But no, I wouldn't really touch this one. They're at an all-time low. The whole entire company is worth $1 million, and they lost 2 million in net income. So, oh dang, look what their assets have absolutely depleted. So it looks like they're going bankrupt. I wouldn't touch that one. Sorry. So, Adobe stock. You know what, Adobe? I think this one is going to be re-rated. They're really seen as an AI loser right now. ChatGPT might replace Photoshop in 10 years. I know some people, they right now are making incredible realistic logos in ChatGPT that you wouldn't tell our AI made and would take me a long time to replicate. But I think we always are going to need that final touch. And I think as the market prices in, and I think this should be probably like a $400 to $450 stock. They're trading at 22 times net income. Do beware, a lot of the software names have just getting hurt. Like Salesforce has been getting wrecked. Adobe, same price as they were back in 2020. And I'm on an Adobe product near daily. I'm on Photoshop, After Effects daily. They print money. For right now, the business is booming. They're making 1.7, 1.8 billion of after-tax net income a quarter. Their free cash flow is even better. They're making over 2 billion of free cash flow a quarter. And what are they doing with all that money since they don't pay a dividend? Well, they're actually using it all in share buybacks. So the net income is up by 7.5, but the net income per share is up by 13, nearly up by 12.89. So that's the power of the buybacks. I know they're just going to probably buy back their shares like crazy at this price, give you so much more ownership in the company. I honestly think I wouldn't have them as a huge position, but honestly, I wouldn't call anyone crazy to buy a little Adobe at this price today. I might even look into that. Okay, but yeah, that's why they're kind of trading at such a low multiple. It's that AI thesis. The AI thesis was hurting Google for a while. That's why Google was trading at a teen multiple. Is crazy. So, okay, brother, when do you decide to sell any stock? Really when I don't believe in it anymore. And I really don't trim my companies either. Like every stock that you see on my screen, I have not sold a single share ever. Like I've not taken a single dime of profit on Powell, never taken a single dime of profit on Comfort Systems. That's actually some of my biggest mistakes. Like Robinhood, for example, I'm up 757%. I sold like 50 shares plus, like at like a 200 to 300% gain. I sold most of my position and I regret it. Same with SoFi. I'm up 335%. I never expected to be up that much yet. So sometimes don't take profits on companies you really believe in. Unless your thesis like really changes, and you keep them as small positions, that way they can grow to big size positions. And since they start out as small positions, you don't want to trim them because they're still kind of small positions. So anyway, all right, let's keep going. Sentinel, have I bought anything today? No, I've not bought anything today. It was CPI day. I was pretty nervous going into today. Hey, Ariel, no way. Thanks so much for the 2 roses. Can you do Poet? Yeah, we'll do Poet after this. Thanks again. I do really appreciate that. Yeah, hey, that's good, Pinky. Don't sell any of the long-term, like why trade Google for cash right now? I mean, maybe trim it a little, but never fully sell out of a position. That is a great never sell. Go regret it. So here's Sentinel One. They're kind of been trading at all-time low levels because they can't get profitable. If we go to these net income losses right here, like they're losing, 80 million to 200 million of net income a quarter. Sales are growing very nicely. Sales are up 21%. That's nice growth. But these net income losses, I think, are the reason investors aren't too happy with them, just because they're losing a bunch of money. We really want to see them get net income positive. Hey, they're one of the few companies that have a single ticker symbol or single letter ticker symbol. So what happens is, hey, leader, I'm on a broker right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. POET. This is, what is this? Poet Technologies. Let's analyze them. So they're a very small company. Do beware. Thanks again for the 10 roses there, Ariel. I do really appreciate that. So they're only worth $490 million. So do beware. They are an extremely small company, but let's go see what they do. Non-recurring engineer service and product sales. So they're really a revenue-less company. If we go to the revenue right here, well, actually, it used to be, well, it's kind of choppy. Like it went from 8,000 to 200,000. So at least the sales are increasing. But again, 200,000 of sales is not much. And they're losing net income every quarter, near 10 million net income a quarter. So I'd be careful with this name. I wonder if analysts are expecting any growth. So actually, the sales are expected to go to, it was 200,000 this quarter, supposed to go 400,000, then 600,000. So actually, it does look like analysts have a nice path there. But yeah, again, do beware. I wouldn't put, like, honestly, I wouldn't trust a significant amount of money in that company to just buy and hold for the long run. Just want to know, I really appreciate you for streaming. Hey, thanks, John. I do appreciate that. So let's see. TIGR and FMAT. What is TIGR? Uptech Financial. Hey, this one's on my watch list, actually. So unfortunately, they are the same price as they were back in 2019. So the stock has been flat for a while, but let's go see how they're doing. Clients are 2.58, or paying clients are 1.19 versus 0.98. So they've increased their paying clients by 20% year over year. That's great news. Those are the valuable clients. So check this out. This is also great news. The sales are up 58%. And the net income is up 100 or 1,000%. It went up to 41 million. What's the margin on that? 30% net margin in the most recent quarter, up from 3% year over year. So no wonder this stock has really seen such a monster rally the past couple of weeks. They're profitable. They're profitable every quarter. Where did the sales come from? Okay, so actually, do beware. Actually, I don't know if this is a bad thing, but 40% of the sales come from New Zealand, then the US at 31, then Singapore, the Cayman Islands. So I like judging them off their financials. That looks great. Heading in the right direction. Okay, FMAT. I don't know if I've heard about this one. Let me pull it up here. I can't type in. There we go. Fidelity Covington Trust Materials ETF. So let's see what's in here. Sherwin-Williams, Ecolab, APD, Air Products and Chemicals. So MLM as well. So yeah, like a materials, chemical kind of company. And that's really niche. So yeah, I like those ETFs where you can like buy an individual sector, like the utilities ETF, the real estate ETF, the tech heavy QQQM. So pretty cool. All right. ARCC will make a lot of money. So yeah, I'd be very careful with ARCC. So this is a mortgage REIT. So a lower interest rate environment would maybe help them. ARCC. Actually, I was thinking of ARC. Okay, actually, forget everything I just said. This right here is a BDC. I remember this company. This is Ares Capital. I thought this was something else. Sorry. This is Ares Capital. This is one of my favorite BDCs out there. If you like a high-yielding dividend stock, this company has a sustainable 8.6% dividend yield. They're a BDC, a business development company. They just do first lien loans, second lien loans, and take equity in the companies they lend money to. The revenue did fall 1% year over year, but it's this net income that really makes this company great. I mean, again, the reason the yield is so high, because this is abnormal for most stocks, a 9% yield, they actually have to, by law, pay out 90% of their taxable income in the form of a dividend. And the dividends you receive aren't taxed like a normal dividend. It's actually taxed at short-term capital gains, which is a higher tax bracket than a normal dividend-paying stock like McDonald's. So do beware of that, but I love the company. Michael said, what app are you using? Yeah, hey, again, this is a broker where you buy stocks on. It's my favorite one, lowest fee one. It's in the link tree in my bio, the very first link there if you want to get it. Appreciate your input. Yeah, hey, no problem there. Ooh, Ali, what's up, man? Good to see you. He says CPRX. So I actually own this company. I actually own them in my Webull account. They're one of my losers. I am down 10% on this stock. So let me share with you why I really like this one. Out of all the healthcare names and out of all the $2.5 billion companies out there, I like this one. Not financial advice. Let me give you a quick analysis on them. They really just sell two products, but remember this whole company's worth. You're buying this company at a $2.5 billion company. You're buying a business that legit has no debt at all, so they're debt-free with $650 million of cash. So a huge chunk of their market cap is just their cash on hand. And they're also extremely net income positive, easily making over 50 million of after-tax net income a quarter. These year-over-year growth rates look very nice. No debt on the books. Free cash flow is extremely strong. Here's the actual FCF free cash flow number. This is great. 60, 70 million a quarter. They basically sell these three different prescriptions. Fernapsi, Argamra has been, whatever how you pronounce this, has been super growthy. They created this in Q4 2021. It was $1 million of sales. Now it's 27 million. I like that growth rate. Also, Fernapsi's been growing nicely. So anyway, that's CPRX. They are a bit concentrated and there are some risks, but the multiple looks pretty fair on that one. What up? What up, Jacob? He says, I feel like Apple's going to be left in the dumps. So I know Apple is kind of like behind on AI. They have like no product themselves. Actually, that's rumored. I'd actually love to see this. Apple to use Google's Gemini for Siri, which would be pretty interesting. You know, Apple has a huge market share, a 19% smartphone market share. Apple did have the reason they're falling the past couple of days. The Apple event was a little disappointing for investors, but huge market share. You know, legit half of Apple's revenue comes from the iPhone. But the most valuable part of Apple is actually their services business. You know, you go spend $100 in the App Store, $30 of it goes back to Apple as a royalty. So if you're buying a bunch of Clash of Clans gems, 30% of it goes back to Apple. Maybe you should buy the stock as well. I think it's a good buy and never sell stock. I mean, hopefully they can overcome it. But then they have the Mac sales, the wearables and accessories, the iPad sales. And here's also why Apple's affected by tariffs. Like, did you know most of the revenue comes from outside the US? Only 36% of their revenue comes from the US. You know, 25% of the whole business is in Europe, 17% of all of it's in China. They make a lot of money, like 25 billion of net income a quarter. Then they just spend it all on share buybacks. You know, that's how, if you look at the net income per share, it's up by 12% when the net income's only up by 9%. The share part of the ratio went down, and because they bought back like 100 billion of their own stock. Kind of nuts. Okay. Hey, what up, Kel? He says salam. Is that a stock? But good to see you. RBRK, is that Rubrik? This is a nice software company. They did just report earnings. They traded a very high multiple. Let me see what their earnings were. So they beat on revenue, they beat on EPS, and they beat on EBITDA. So it was a triple beat quarter, but the stock still fell anyway. I wonder if maybe they gave bad guidance or something. I don't know. Let's check. Maybe it's just the fact that they traded a high multiple. Something just happened to their balance sheet as well. Actually, let's go see if they bought a company. They did. Actually, this is very interesting, and I'd like to look into this. Basically, if this number's negative, that means they're buying assets, investing in the business. They could either buy land, buy a company, and you want this to be negative. And they invested 735 million in new assets. That's great news. Sales are up 51%. A little bit of that probably came from this acquisition, but that's incredible growth. 51% revenue growth. Losses narrowed by 45%. They are a big money loser, losing 100 million net income a quarter, but the losses did narrow. So that's a very interesting numbers. They're on my watch list. All right. Can you check? Yeah, if you got a stock you're going to look at, let me know with the ticker symbol. I'll check it out for you. All right. Let's see here. VG stock. What up, dumb? He said VG company. This is Venture Global, $33 billion company. You get a 0.3% dividend yield. So, hey, you do get a dividend with this company. Plaque Mines Project, whatever happened, it's booming. 2 billion in revenue. Something. I mean, what industry are they in? Oil and midstream. So maybe they own like I don't know. Let's see. The revenue is up year over year, 180%. They're net income positive as well. They made net income every quarter for the past couple quarters. Free cash flows going nuts. So I got to do more research. I'm not too sure what they do, but it looks like they're in the oil and gas industry. Interesting. All right. Which one did you just cover? Oh, I don't remember. Oh, I think it was Rubik, RBRK. And by the way, if you missed anything, I'm also streaming on YouTube. That's actually the best way to support me. If you want to support me, best way is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. You can just type that into YouTube. It's also in the link tree in my bio. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never DM you, follow you. I have no other accounts. Only other account I have is my YouTube channel called Nathan Robert. Anyway, if you watch the stream from there, it means the world to me. But TikTok keeps randomly taking down my streams sometimes, and it's unfortunate. So if you're ever watching the stream and it goes down out of nowhere, it'll be continued on the YouTube. So anyway, let's keep going. And you hit the notification bell too. Yeah, if you're on the YouTube channel, if you hit the notification bell, pretty much the only thing I do is go live on YouTube. I barely make any videos. So you'll get notified every time I start the stream. Okay, let's keep going here. What up? What do you think of Intuit? This is a cool tax company. Ticker symbol INTU. I actually think they're worth looking into. I really like them. They're really growthy. They still trade at a high multiple. They still trade at 50 times net income. So, that's the tough part. So they could potentially go lower, but they deserve a high multiple because they're high growth. I mean, you can see the growth of the annual sales on their global business solutions. This is their tax product. TurboTax, as you can see, it's growing tremendously, and all their revenue. These year-over-year growth rates just look incredible. And then they also have the consumer business. That one's also on an annual basis, just hits a new record every year, every quarter. As you can see, this is. Also, you can see it's tax time every year when they make all their money for the year. But anyway, if we go to the bottom line, the net income, they're making a bunch of money. I mean, is that real? Yeah, they're making easily like over $4 billion of net income a year. And but they're worth $184 billion, so they do have a bit of a high multiple. But you get a 0.6% dividend. They raise their dividend every year. I really like this stock, and I'd like to get exposure, but it could go a little lower. The valuation is still a little high. I wouldn't go all in at this price right here. DCA, dollar cost average, you never know what's going to happen. Like a Perio Network, if you want to buy a stock, I recommend you do this right here. Instead of spending all your money at once buying the stock, slowly buy into it. It's a more disciplined approach, and it doesn't always work though. Like look at this stock right here, even though I dollar cost averages, I'm down bad on it. So always do your own research on it. Okay. So what is this stock? MOGU. So this is Mogu. I don't know what this is. Approved a strategic allocation. Oh, so they bought 20 million of Bitcoin. So that's why the stock went up so much. So they bought 20 million of Bitcoin, and the whole entire company is only worth 36 million. And that 36 million market cap is only this high because they're up 77% today. So that's really what the market priced in. It has like a basically base of a $20 million market cap they're Chinese. Okay, well, I wouldn't buy this one anyway, but it just looks like another Bitcoin mining momentum company, like the next Bitmine. So maybe trade it, make some money off it, but I wouldn't trust that one. Yeah, super risky. Okay, let's keep going here. Duolingo, what up, premium? He said DUOL. I love Duolingo stock. Wow, they're up 8% on the day. They've had a nice little rally the past couple of days here. This stock has really been sold off because the AI thesis is hurting them, like ChatGPT or OpenAI and Google have made competitors to Duolingo. If you don't know what Duolingo is, it's like that language learning app. And on their app, if you don't pay for a subscription, you see a bunch of ads. So a lot of people pay for their subscription. 83% of the whole business is their subscription revenue. And check out the growth. This is the part I don't believe. And this is why I really like Duolingo as an investment. The growth of the sales just hit a new record every year, every quarter. It's an incredible subscription model company. So subscription revenue is at a record. And for the people who don't pay for the subscription, they see ads. And the advertising revenue is up 55% year over year to a new record. So both businesses are booming right now. And again, I think they've overpriced in the uncertainty of the future revenues. So I think they've overdone it. They're making net income every quarter. It's a net income positive company with no debt at all. Assets just went down with the liabilities. They just completely deleveraged. Great news. Sales are up 40. Net income's up 80, which means they're expanding their margins. 17% net margin. FCF, which is free cash, it looks great. So I think Duolingo, I like them. I wouldn't have it as a huge position, but I think they're a cool little software name to own. What I mean when I say I wouldn't have them as a huge position is kind of like these stocks right here. Like as much as I love Toast, SoFi, Robinhood, Clear Secure, I can't make them meaningful size positions. They're fun little holdings, but I wouldn't make it as like a crazy big size position. Can you show the stocks you invested in? Yeah, hey Darren, there's that portfolio, and here's my main buy and hold account. Yeah, if you want me to show anything specific, let me know. I like being fully transparent. Like I go on a bunch of TikTok lives, and no one else like shares their portfolio and how's their year to date performance and all that. I like to share all that. So yeah. Anyway, yeah, here's my Roth IRA. We were just looking at Inno data in there. I want to really check my portfolio really quickly. Yeah, so we're selling off a little bit. How's the actual SPY looking? Oh, the S&P 500 looks great right now. New all-time high. Yo, congrats first off if you own any stocks. Most likely, if you're in the right companies, your portfolio is doing amazing. Wow, Google's at $242. Google's going crazy. So anyway, let me check my watch list really quickly. Yeah, Tesla's up 5. Where's... Uh-oh. Oh, well. Let me check this. Oracle's down a bit. Let me see. Open Doors up 70. Oh, yeah. Warner Bros. Discovery's got like an offer to be bought by Skydance. So that explains the 27% gain on them. Circle's up 16. Red Robin. Yo, anyone heard of Red Robin, the restaurant? They're pretty much going bankrupt. They're only a $100 million company now. Down like 80% from its peak. Yeah, the market's doing pretty good today. The mid caps are like catching up. Okay. Hey, thanks, Julianne. I appreciate that. So, what's up the most? Yeah, Dave, Futu. All right. Let's look at Zoetis right here. If you like pets, you might like this stock. This is an animal healthcare company, and they sell a lot of products for dogs, cats, and livestock. So if you ever look at a cow's ear and you see like a weird white circle in its ear, that's actually a flea repellent that like releases like fluid all over their body that protects them from the fleas. And check this out, they're in parasiticides, vaccines, dermatology, anti-infectants, pain and sedation. So a lot of they're a pure animal pharmaceutical company, and they're making a lot of money. They're also growing their margins. Like one thing investors were a little disappointed about, and that's why I think the stock has been flat for a while. It's the same price that it was back in 2020. The sales are flat, well, not flat. The sales are up single digits. I mean, I think investors wanted a little more growth. Like last quarter, the sales were only up 1% year over year. It's up 4% year over year, but they're making a lot of money. This is the good news. They're making 6 to 750 million of net income every quarter. The free cash flow is also really good. Did they actually? Yeah, so they sold off a couple prescriptions over here. It's way more than 126 million, but they return anyway. Zoetis, I do like this one. I think they're going to be a winner in the long run. They're TAM. I've watched like a bunch of interviews. I used to own this stock right here. The TAM grows at like 3 to 5% a year. It's not like this company won't really outperform the market in the long run, but you get a nice dividend. They also have crazy share buybacks. I like the industry. I like Zoetis. I think they're a good long-term hold. What app are you using? Yeah, hey, Kayla, I'm on a broker right here. It's where you buy stocks. So they ask you for a bunch of information. But if you want to get this app I'm on, it's my favorite brokerage. It's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. If you want to get this app, link tree in bio, well, actually, if you sign up and deposit $100, we'll both get a fractional share of NVIDIA. Pretty cool. So anyway, like a $20 fractional share. Okay, anyway, full disclosure, it is an affiliate link, or you could just go to Google and type it in, just a broker called Moomoo. But yeah, let's see here. Earnings on Chewy report. What up, Michael? Good to see you, friend. So Chewy report on Wednesday, sold off morning. Kroger report. Yo, I like Kroger more than Chewy, for sure. But let me go analyze Chewy. They did fall. Let me see what the numbers were. So they beat on revenue, they missed on net income, and they beat on EBITDA slightly. So it was like a mixed bag quarter. Revenue's up 8.5. Profits are up very nicely. So it looks like they're making very consistent profits now, which is good. They didn't. Actually, no, that was a normal quarter. I wonder why the stock fell so much because they actually beat on revenue. Maybe it was the bad guidance, but speaking of Kroger, you know who just bought some Kroger was actually Warren Buffett. You know, he has to make all his trades public. So if we go to it, yeah, his newest position was United Healthcare. He bought a bunch of UNH, but one of his portfolios, yeah, he made it a big position. 1% of his portfolio is now in Kroger, ticker symbol KR. And this is a very nice grocery store, and the grocery stores are very low margin. So, like, check this out. When we go to their net margin, Kroger legit has 2% net margins, but this 2% net margin makes them, 500 million to a billion of net income a quarter. So, yeah, they have a nice dividend. You get a 1.84% dividend, 33% payout ratio. So they actually have a lot of room to raise their dividend. They're also huge in share buybacks. Check this out. The net income is down by 9%, but this is the crazy part. They actually issued debt to do some buybacks, but it was kind of smart. It was smart of them. Look at this. Net income's down by 9.2, but the EPS, or net income per share, is down, or it's 0.00. It's neutral year over year. That's because the share party, they have bought back 9.2% of the entire company in the past year. So the buybacks are really fueling a lot of Kroger's stock price appreciation right now. Oh, yeah, it was actually, Kroger was trying to buy Albert. That's what it was. Okay, it was actually, Kroger was trying to buy Albertsons, and they couldn't get regulatory approval for it. So Kroger didn't buy Albertsons. They saved up a bunch of cash to do it. And then they're like, well, since we can't do this acquisition, let's just buy back our own stock like crazy. So that actually explains. Okay. All right. Ooh, Thomas said TTWO, Take Two. Yo, so this company right here is the company that owns Rockstar Games. So if you've heard of GTA 5, Red Dead Redemption, or GTA 6 is about to come out. That's why the stock has rallied so much in anticipation of GTA 6's numbers, because they have this asset. They're in a unique position where whenever they release this game, whenever they release it, it's going to bring billions of revenue that quarter. Like it's going to change the outcome of the whole business. So the future growth is really what is being priced in. I really probably wouldn't buy this one here. I think for the most part, it's mostly priced in. Yeah, the GTA 6 numbers, I can't wait to see what that does to TTWO. They need to release that game already. But yeah, I think they're really trying to perfect it, which is good news. It's going to be probably the top 5 biggest games in history. So Take-Two is a game company. Pretty interesting. Okay, Novo Nordisk. Yeah, hey, Novo Nordisk, this is that weight loss company. I'll be quick about this one because we kind of just looked at them not too long ago. But it looks like today some news came out. They cut 9,000 jobs. So they fired 9,000 people. That's not great. That means like future demand probably isn't there. But they're trading at a very low multiple from the industry. They're trading at 13 times net income. That's because they lose their exclusivity for Ozempic. So this is the company that owns Ozempic. They own Wegovy. Elon Musk is on Ozempic, and that's where 95% of the revenue is. Their diabetes and obesity care products, and they actually lose their exclusivity for Ozempic in a couple of years, which is why I think their multiples collapsed a bit, the future uncertainty. But for right now, the business is doing great, making over $4 billion net income a quarter. You get a nice 3.3% yield. They raise it every year. So Invio is really interesting. They're European. You do pay an ADR fee, but interesting. Yeah, Jeff Mack, good to see you, man. I don't believe it either. INOD, near all-time highs. Like, there's no news. That's the crazy part. Like, normally when you see this unusual kind of activity on a stock, they'd report earnings. It'd be like a buyout news. There's just no news. There's no news for this stock to be up. And anyway, I'm not going to question it. We're now up if I go here, they're in my Roth IRA. So we are up a crazy 83% on InnoData. Most of that has just come from the past week. I mean, this is moving like an option. And just literally a week, they're up 65%. So yeah, we're up 83%. Pretty crazy gains on InnoData. We're down on all our other positions in here, really. So yeah, pretty cool. They're super growthy. I mean, InnoData, super quick analysis here. The revenue's up 80% after going 65. The revenue's at a record. This revenue is a record, 59 mil. and in 2 quarters, the analysts are expecting that to continue to 71 mil. They're also net income positive every quarter. They have no net debt. They're deleveraging. They're free cash flow positive every quarter. I have YouTube videos about them if you want to check it out. I love them. Open Door to the Moon. Yeah, they were up like 70%. Wow. Open Door is up 77%. I wouldn't touch this one. It's all momentum. They're really begging for a lower interest rate environment. This is, oh, hey. Watch out for that person in chat. Hold on. Man. Yeah, watch out for those people in chat. That's not me. Let me actually, I can't report him. That'll take too long. Okay. Hopefully it removed that message. It's still on my screen. But anyway, yeah, by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I'll never follow you, DM you. Watch out for people impersonating me. Watch out. Okay, let's keep going here. Sorry about that. Let's keep going here. More stocks. All right. GZ Architecture or whatever what's the ticker symbol for that stock? Yeah, if you got a stock you want to look at, let me know what the ticker symbol. Oh yeah, here's a popular one that's up crazy today. They're up 30%. This is Red Cat Holdings. And what do? They sell drones. And this is the good news that they got today. Red Cat's new Black Widow drone gains NATO approval. So they're now able to sell this product to all the NATO members. It's a drone, drone. I can't say that word on live, but drone attacks are kind of popular. They're a $1.1 billion company. So still a very small market cap. And the next 2 quarters are extremely crucial for this company. So the next 6 months are going to be very volatile if you're in this stock. And here's why. They're going to transition from a revenue-less company to finally having revenue. The sales were $3 million, pretty much nothing. But look what it's going to be in 2 quarters. They're expecting $25 million next quarter. That's huge. And then $45 million. So the next 2 quarters are very crucial for this stock. I think that's why they've been rallying up so much. Hey, NATO approval. That can't be bad news. Hey, yeah, Michael said what message? Yeah, it was on the TikTok stream. Yeah, I'm streaming on YouTube and TikTok right now. By the way, the best way to support me is watch the stream from my YouTube channel. I'm streaming on there as well. Sometimes I talk too fast, so if you miss anything, you can rewind it. It'll be there forever. So my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And but yeah, that's the best way to support me. I don't sell anything. So yeah. All right. So let's see. Email said EDHL stock. What's this one? Everbright Digital. So yeah, we don't really talk about these kind of companies on the live here. If you look in the top right, they're only worth $25 million. Dollars. So they're a very small company. For the entire year of 2024, the sales were 2.7 million. So we're not going to cover them. Super careful with that stock. What's the best upcoming stock? Oh, you mean like the IPOs? You know what? I'll quickly go over the IPOs since it's pretty interesting. IPO. What are the recent IPOs? So yeah, here are the recent IPOs that are coming. The Gemini IPO, which is like a crypto thing. StubHub. Has anyone heard of that? What is that? I don't know. Anyway, do beware if you buy an IPO before it goes public. Do beware of the flipping policy. If you look in the very middle of my screen here, it says investors selling shares within the first 30 days are restricted from future IPOs. At least for this brokerage. I'm pretty sure it's that way with other ones as well. But yeah, they don't want investors buying it before they IPO and then instantly selling. And that's the tough part because what we've seen a lot right now is with a bunch of IPOs like Klarna, Bullish, Webull, CoreWeave is as soon as they IPO, they like instantly rally up and then they kind of trend down and fall. So it's kind of the money to be made is right when they IPO within the first 30 days. So okay, that's IPOs. I don't touch IPOs because they're just so volatile and so risky. I've never bought an IPO ever, but a lot of IPOs do really good as soon as they go public. Pretty interesting. So, what happened to PPC? What's PPC? LVMH. Hey, Card. Remind me. I really want to look at that stock as well. Remind me to look at them. So Pilgrim's Pride, I believe this is like a food company, like they sell beef and chicken, or maybe not. Let me check here. Production and marketing of fresh, frozen, value-added chicken and pork. So yeah, chicken and pork is what they sell. Where's the revenue come from? 56 comes from US, 28% EU, then Mexico. So the sales are up by 4.4. Net, they're making a very solid net income. They're making a couple hundred million in net income every quarter. This looks very good. How about free cash flow? And free cash flow as well is really strong. What's the yield? No dividend on this company right now. Let's see if they're doing share buybacks then. So they're not doing any share buybacks. They've actually diluted you by 1% year over year. Well, did they just pay off debt? Yeah. Oh, actually, good news. They actually, I approve of this. Instead of doing share buybacks, they just paid off $1.58 billion of debt. That's what it looks like from the previous quarter. All right. Anyway, oh no. Neo stock. Hey, unfortunately, I don't. Oh, LVMH. Okay, LVMH. Then we'll look at Neo. Unfortunately, I don't have any good news to say about Neo. Um, they lose a lot of money, or it'd be hard for me to trust a lot of money in Neo. If you want me to look at them, I will. But if you got another stock you want me to look at, let me know. But here's LVMH, Louis Vuitton. A lot of the luxury brands have been getting hit recently. Like not even all the luxury ones, like Lululemon. Nike, both of their stocks have been getting crushed. So it's kind of like an industry-wide thing. But here's Louis Vuitton. Here's what I really like about them. They own a bunch of different brands. I believe they own like Dior. They sell drinks as well, like a Hennessy and a bunch of different products like that. But anyway, check this out. Fashion and leather goods, that's half the revenue. Selective retailing. Then they're in some really high margin, like high ticket, high margin sales, like watches, jewelry, perfume, cosmetics. So that's what's pretty cool about them. But they're also seeing the same kind of margin compression as some of the other stocks in the industry. Like check this out. The net income is actually down 15% year over year. They report in halves because they're European, or maybe they're, I believe they're headquartered. Oh, they're in France. Okay, so they're headquartered in Paris, France. So they report every 6 months, and I think you have to pay an ADR fee. But I really like them. What app is this? Yeah, what up, Snowflake? But this is actually a brokerage where you buy stocks on. It's in the link tree in my bio. The very first link there. It's my favorite one. Mr. Millie, what's up there? He says, can we look at SoFi? Let's do it. So I love SoFi. I do own this one, by the way. They deserve to be doing this good because they've beat my expectations and the analyst expectations. Like if you go to their financial services business specifically, check out the monster growth this is seeing. Like it's at a record. It's up 105% year over year after growing 80%, after growing 222%. So the growth of the financial services business is absolutely ridiculous. And also the lending side of the revenue is also growing nicely. It's up 30%. So what I really think is happening is people are really starting to take SoFi serious. They're super growthy. Revenue's up 42. They made an 850 mil of revenue. And out of the 850 mil of revenue, 100 million of it was after-tax net income. So I just really like SoFi. Everything here is headed in the right direction, in my opinion. I can see why they're doing so good. Casey, what's up? He says you're not gonna want to hear this. Bro, why did my phone just go off? Hold on. Okay, that's very weird. Okay, my other phone across the room, the Siri went off. Oh, I shouldn't have said that. Okay, here's IDCC. Oh, hey, I know you're happy, Casey. This stock is at all-time highs today. Oh, hey, yeah, this was the company I was looking at yesterday that like really impressed me. And they also really impressed analysts. This is the reason they're at all-time highs. Check this out. This orange line is what the analysts were expecting. And look at the huge beat. Like that's a monster beat on revenue. It's a tremendous near double 100% beat on the net income expectations and the EBIT expectations. Everything beat like crazy. So that's why the stock is at an all-time high. That's why they gapped up so much on earnings. Net income was a record 180 million. You know, if they beat like crazy on this quarter, they're almost certainly going to be beaten like crazy the next couple quarters. And the guidance is going to get risen. The analyst expectations of the EPS is going to go up, and that will make them look forward PE cheaper. They're already trading at a cheap valuation 22 times, so they could go up even higher. I'm not shocked they're going up more. Jonas said, what app is this? Yeah, hey, again, sorry, people keep asking. I I should pin this, but yeah, if you want to get this app I'm on, it's a brokerage where you buy stocks on. It's my favorite one. It's in the link tree in my bio, the first link there. Um, or you can just, it's an affiliate link, full disclosure. We'll actually both get a little fractional share of NVIDIA. But yeah, lowest fee brokerage, link tree and bio first link, or you can go to Google and type it in. It's a brokerage called Moomoo. Okay, GLW, this is Corning. This is a very cool stock right here, and they're at an all-time high. That is actually insane. So congrats if you own this stock. You got to be up on your money. Optical communications. Yeah, check that out. Business is at a record up to 1.57 billion, 40% year over year growth on that business. Display revenue, that's actually down year over year. Specialty materials is up by 9. Automotive is down. So let me see the revenue right here. The revenue is up by near 20% year over year. That's good growth. They made, oh, wow. It's actually probably the surge of the profits. That's great news. It's up 3x year over year. The profits have 3x'd. That might be why investors are so happy. Oh, hey, it looks like Samsung owns a bunch of them. Samsung owns 8.3% of all the shares. You also get a 1.5% dividend yield. Very nice. You get a 1.5% yield on them, even though they're at all-time highs. That's crazy. I wouldn't, buy them here, but nice. Hey, what up, Doodle? He said UNH, let's do it. UNH. Luke said, can you look at AMBIQ Semiconductor Company? Is that the ticker symbol? We'll try it. We'll check it out here. So, what up, Doodle? He said UNH. You know who just bought the dip on this stock? It's Warren Buffett. That's the reason this stock gapped up on this day, solely on the news of Warren Buffett buying. And he doesn't buy a stock unless he really does his due diligence. And they've seen some momentum the past couple of days here. Here's one reason why the multiple is so low compared to its historical average is because the future is a bit uncertain. Like the analysts are expecting the net income to fall by 50%. They're just going to be making $1.70 of EPS. That the dividend, they won't even be able to afford the dividend with that net income. So the margins are going to get hurt. There's just the regulatory headwinds, but I think it's mostly priced in at this point. The worst is most likely over. You get a 2.4% yield. Realistically, I wouldn't touch this one over $300 meaningfully. They have had a really good rally the past couple of days, but I wouldn't buy it here just because there is a bit of risks. But or I wouldn't make it a meaningful size position. So yeah, Warren Buffett, here I'll show you the position as well. Warren Buffett, has to make all his trades public by SEC law, and his newest position is UNH, United Healthcare, about 5 million shares. He also bought Lamar, an advertising REIT. They own the number one market share for billboards, like 65% market share, like a monopoly. CoreWeave a buy after Oracle jump. Yeah, hey, Oracle really sent up the whole AI ecosystem, Oracle is opening 37 new data centers. Those data centers are mostly going to be using NVIDIA GPUs. So, it sends up the whole ecosystem, which is great news. So check this out. CoreWeave had a crazy day yesterday on that news with Oracle. One thing I really like about CoreWeave specifically is how growthy they've been. The sales were at $400 million a year ago. Now it's $1.21 billion. It's a 3x increase. At $1.21 billion this quarter, it was a record, and they're expecting it in 2 quarters to be $1.8 billion. So the revenue is expected to just keep on climbing up. The growth is going to continue. I don't love these net income losses. They do lose a couple $100 million a quarter, but analysts kind of expect that. But yeah. JS said, please NVTS. This is actually kind of a trash stock. I mean, the reason they rallied on this day was because they got a partnership with NVIDIA, or it was something like NVIDIA did something. But basically, I believe this company legit might go bankrupt. If we look at their financials right here, just judging them off their financials, I'm not sure what the NVIDIA partnership will do, but I mean, the sales are barely any sales. The sales are down 30% year over year to 14 million. And the analysts are expecting the revenue to just continue to go down to 9 million, 10 million. If we look at these net income losses, that's the tough part. Before the NVIDIA partnership, they were like a couple $100 million company, but they're losing an insane amount of money, 50 mil, 20 mil, 40. So they're losing over 100 million of net income a year. So I'd be very careful with that name. Kind of in NVIDIA's hands. I think NVIDIA wants them to stay afloat though, so. Okay. Been in UNH since the fall at 268. Yo, that's great, Doodle. You're up a good chunk. TATT. What is this company? TAT Technologies. Wow, okay. They're at all-time highs. They're worth $475 million. Let's go see if they deserve to be at all-time highs and if there's more upside. Let's see what they do. Maintenance, repair, and overhaul for aviation components. Maintenance, repair for heat transfer components. Original equipment manufacturing. Let's see, how are the sales growing? Sales are up 20% year over year, and their net income positive. You know, they're going on the watch list. This looks great, man. Everything so far looks great, and they're debt free. Hold on. Okay, so they did dilute the shareholder a bit, but that's all right. I don't blame them. They're making, that's great. You know, when you're only a $450 million company, making 3 to 5 million of net income a quarter is really meaningful. So what's the multiple? Yeah, they're trading at 30 times net income. Not financial advice. I think there's more upside with this name. And I'm actually, you know what? I'm actually really happy. I really like that stock. I might even look into them later today and buy them. They look very interesting. 30 times net, and they look really good. Okay, thanks, Celebrate. You know what? I wish I could donate you a rose. Okay, thoughts on GNTX. What's this one? GNTX, Gentex. Okay, this stock right here has been flat since 2019. Let's go see if we can figure out what happened here. But do know they did just report earnings. That's why they gapped up so much. So they reported earnings, and it was very good. So let's see what they reported. Yeah, good beat on revenue. You know, usually if you're wondering why did a stock gap up so much and go up, you just look at their financials. It usually explains why. And you can see the analyst expectations, but they beat on the revenue expectations. They beat like crazy on the net income expectations and on the EBITDA. Whoa, a 30% beat on the EBITDA. So they're making $100 million of net income a quarter. Sales are up 15%. Debt free. No, that's a great balance sheet. Fortress balance sheet. So, GNTX, I see why they rallied up on that so much. That was a good quarter. What is Love report this morning and down? What is Love? The Love Sack. Let's see what this company does. Is that like it's a technology company? Okay, wait. Manufactures and sells furniture. Foam beanbag chairs called sacks. Foam beanbag chairs. Okay, let's see. So, wow, they sell a lot of it. They're doing 100 to 200 million of revenue a quarter. But the one bad news is they're choppy with this net income. Looks like Q4, Christmas time every year, they get a lot of orders, but all the other quarters, so very cyclical, all the other quarters of the year are negative. But yeah, I wonder what I almost want to look up what they sell to see if I've seen it before. Oh, it's just like a weird looking beanbag. Maybe I can. Well, I'm on my computer. I don't know. It looks like this or something. I don't know. Okay, let's keep going. This is the next stock. It's a beanbag chair. Okay, so they just sell a commodity. I mean, nothing was blowing me away there. Oh, let's look at Baba, AliExpress. Let's check it out. They're up 9% on the day. So, yo, Alibaba reported earnings. The earnings actually missed expectations on near every metric, but they announced something crazy. They announced that they're going to start manufacturing and designing GPUs because NVIDIA can no longer ship their most advanced chips to China, and there's a huge void that needs to be filled. So Alibaba said, we're going to make chips to fill that void. And they can afford to do something like that. First off, they are Chinese, but I love these net income numbers here. They're making, if you average it out here, pretty much $5 billion of net income every single quarter. You also get a yield now with them, a 0.7% dividend yield, safe payout ratio. The net income multiple is an 18. It's a pretty fair valuation. But yeah, they own AliExpress. They're like an e-commerce play. They're more like business to business, more than like business to consumer like Amazon is. Because a lot of people buy a bunch of stuff in bulk from AliExpress and then sell it. Alibaba is selling to a business mainly. Okay. Um, let's see here. How can I be a hey, what up? What up, my dream league? You just gotta, if you want to buy stocks, you just gotta get a brokerage and buy stocks on there. If you want to get this brokerage I'm on, it's my favorite one. Lowest fee, most useful brokerage in my opinion. If you want to get it, it's in the link tree in my bio, the very first link there. CLS, Celestica, let's do it. Hey, that's that stock that's at like an all-time high. Yeah. Wow. So congrats if you own this company. They deserve to be at all-time highs. Alibaba looking good after their Apple deal. Hey, what's that Apple deal? I didn't hear about that. That's really interesting. Um, but yeah, CLS, they're in a popular business right now, connectivity and cloud solutions. These year-over-year growth rates in the middle look very strong, very good. How they do on earnings? So this is probably why the stock rallied up so much. If you look at the orange line, um, they're beating like crazy on expectations. They beat on revenue expectations like crazy. They beat on net income like crazy. EPS is just net income. Um, per share. And as we can see, the net income is normally chilling at 100 million, but they made 200 million, a 122% increase in the previous year. So great financials on CLS. I'm not surprised they're at all-time highs. I don't think I'd buy them here. They're probably a bit at a high valuation, but they might deserve it. APH stock. Hey, what up, my foot? So APH stock, this one has done incredible. Um, It's like an AI infrastructure company. They're supplying like the copper cables. Like NVIDIA has this new NVLink spine product that uses 2 miles of copper cables. They're mainly ordering from Amphenol Group. So if we go to their communication solutions business, it is up 101% year over year. They also have this harsh environment solutions. How's that growing? That's up 40% year over year. What other S&P 500 company is doing this? Except Palantir and NVIDIA. There's a lot couple, but this is incredible growth. The sales are up 56% year over year. So the revenue is up 56 and the net income is up 108. So that means they're expanding their net margins. They have a 20% net margin, over $1 billion in net income this quarter. The free cash flow, it's what FCF stands for, also at a record, up double from the previous year. They're also acquiring a bunch of businesses. If you go to their cash from investing activity, you always want to see this negative. That means they're buying businesses or reinvesting back into the company, buying new land, equipment, trucks, buying a company. If it's positive, that means they're selling assets. But cash from investing activities, we love, and they also just bought. They actually just bought ticker symbol COMM, like 80% of the business. So if we go to ticker symbol COMM, the reason this stock rallied up so much on this day is because Amphenol Group is pretty much buying the business, saving them from bankruptcy. So, and it's a good business to buy. Okay, let's keep going here. David said, I love my Amphenol Group. Yo, me too, man. It's been one of my fastest like doubles. Like they've just been incredible. Congrats to everyone who owns that one. They're not really known. They're not too popular. But what was that stock I wanted to look at? Where was it? Oh, what up, JS? He said Rocket Lab, RKLP. Oh, and ISSC is another one to research. Let's do that one too. Oh, and Sezzle, SEZL. I love them. So here's Rocket Lab. It's probably my favorite space stock out there. Out of all the space stocks, like ASTS is very interesting the next 2 quarters as they transition from revenue list to profitable. But Rocket Lab is crazy growthy. So if we go to their space systems business right here, it's up 27% year over year after doubling. Like these growth rates are crazy. So space systems revenue is at a record. And the other half of the revenue, the launch services, was up 60%. This was a record. It's never been over 46 million before. Incredible quarter for both businesses. They also just completed their Geost acquisition, which means the sales growth is going to be even higher. It's inorganic growth, but still adds to the growth that they're already having. They are still losing money every quarter, quite a bit, 50, 60 mil a quarter, but it's all right if they continue this growth. I mean, it's okay. And analysts already expect that and know that. So here's a fintech stock, SEZL. So I own one of their competitors, ticker symbol Dave, but this one also deserves to be doing great. I'd actually, if you like a growth stock, maybe put this one on your watch list. They seem pretty interesting. We go to their revenue right here. The revenue is extremely growthy. I call it a growth stock. They did, the revenue's up 80% and they did 100 million in revenue. And out of this 100 million of revenue, 36 or let me see, yeah, 30 million of it was after tax net income. It says the net income was down 7% year over year. That's because they had a one-time adjustment this same time last year. So it wasn't actually down 7%. It was really up 116% year over year. And again, net income, net margin, it wasn't actually down year over year. No, it was just they had a one-time adjustment, but the margin is consistently at 20 to 35%. Incredible margins for this stock, incredibly growthy. Revenue's up 76, profits up 116. I love everything about this stock. I really can't find any issues with it. Deleveraging balance sheet too. Let me get my water here. So let's see, ISSC. This is Innovative Solutions and Support. Unfortunately, it looks like they reported earnings this day and fell down very bad on earnings and have been kind of falling ever since. Let me see if we can figure out why. So they actually beat on revenue. We don't get a net income expectation, and they missed on EBITDA. So good news, and one thing I really like about the stock is the fact that they are making net income every quarter. They're making a couple million. What's the market cap? So yeah, you're buying a company that's only worth 199 million. So you're paying 199 million for something, and you're buying a business that's making a couple million every quarter. So you buy the whole company for 199 million. You're getting a company that's making positive after-tax net income of 3 mil, 5 mil, 3 mil, and you're kind of just trusting the company to reinvest it for you and do the right thing. Balance sheet looks good too. Did kind of leverage up a bit year over year, but did they buy something? Yeah, so they spent 20 million buying an asset, which is pretty cool. The estate of Jeffrey Hendrick, it's the largest shareholder. The estate, he owns 5% of the shares. Pretty cool. Okay, can you check out can you check out a Danish stock called Zealand? I'll see if I can. ZEAL. I usually can't find these ticker symbols just because I can't view that exchange. So I do apologize there, Marcus. I can't find that stock for you. Yeah, sorry. Okay. Why is it down the past 3 months? I don't know. Maybe they gave bad guidance. That's what we've seen with a lot of stocks recently. Like the numbers are actually good, but they gave bad guidance for the future. And it's really important, the guidance. All right. CNC, is that the healthcare Medicaid stock? Okay, yeah. So, they're up 10% on the day. Maybe that's why United Healthcare is rallying. Okay. They gave good guidance. They updated the guidance and reaffirmed their EPS, which is great news. Yeah, reaffirmed EPS guidance. So that's why the stock rallied up so much, because this company has had a lot of fears of their net income per share. Because if we look at the expectations, check this out. Or if we just go to the EPS right here, or net income, doesn't matter. They're always making like close to $1. If you average it out, over $1 of EPS per quarter. Well, the analysts are expecting it to go negative next quarter, go super negative even the next quarter after that. They're going to be in an environment where they're not making any money for an entire year. Again, they're like UNH. The government's really cracking down on the Medicare and Medicaid businesses, and that's all they do pretty much. Then they have a little bit of commercial business, but Medicaid is 60%, Medicare is 20%. Well, how's no dividend on this company? But yeah. Let's see. What app is that, bro? TradingView? No, hey, what up, Express? It's actually a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It is free. Yep. Yeah. It's a brokerage where you buy stocks on. Link tree in bio, first link there. It is an affiliate link, full disclosure. So anyway, let's see. STZ. Yo, STZ, that's a stock that was just bought by Buffett. If we go to the Warren Buffett portfolio right here, one of the stocks he owns, increased his position. And if you look right here, he increased his position in ticker symbol STZ Constellation Brands. They own a lot of popular drinks you've probably heard before, but they've been struggling with their profitability and growth. Yikes, look at that stock price. That is not too good looking. So here's the thing with Constellation Brands. If we go to their actual revenue, the lifeblood of the company, the sales, if it would load here. Please? Okay, yeah. The revenue is actually down by 5.5% year over year. So do beware. That's not great. Sales are down by 5.5. And look how kind of choppy this net income is. Like, they made $500 million this quarter, but they lost $400 million last quarter. made 600 million, but then lost a billion. So I think that uncertainty is really just kind of it's led to a big decline in the stock price. I know they have a big dividend. Yeah, 2.8% dividend yield. So that dividend isn't safe if they're losing net income. So I overall, they might have oversold that one. Buffett likes them. He bought more. Um, Charge your phone, please. Hey, we're not doing too bad. 27%. All right. Let's see here. I don't think you can see our comments. Yo, I can see the stocks and comments. I'm reading both the YouTube and the TikTok chat. What up, John? He said Eli Lilly in the Skydance. Yeah, if you got a stock you want me to look at, let me know with the ticker symbol, and I can check it out for you. Sorry if I don't get to all the stocks. I only, out of respect, I try to just spend like a minute on every stock, not spend too long. But Eli Lilly, I love this company right here. They deserve to be at all-time highs, For what this company does, they just sell a bunch of different prescriptions. Like Mount Jaro, for example, they just have the ability to create these like prescriptions out of nowhere, and it just creates a bunch of money. Like check out Mount Jaro, for example. It came out in 2022. The revenue the first quarter was 16 million. Now it's 3.8 billion, a 112% increase after growing 200%, after growing 6,000%. Like the growth is incredible. And that's just one of their prescriptions. Another prescription they just created out of nowhere is Zepbound. This is the competitor to Ozempic. It's a weight loss prescription and created it in 2023, sells for 175 million. Now it's up 400% or 4x year over year to 2.3 billion. So they just have incredible growth, and they have a bunch. I won't go through all the other ones there. They're also pretty growthy, but yeah, they're making a ridiculous amount of profit. Profits up 61%, revenues up 37%, so they're expanding their margins. Yeah, 0.8% yield. I love Eli Lilly. Seems like a good buy, never sell stock. What's the app? Yeah, hey Caesar, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's actually a brokerage where you buy stocks on. All right. Oh, I saw BE. Watch out for that stock. Is that Boeing? Bloom Energy. Okay, so yeah, hey, check that out. Up 7% on the day. Is that an all-time high? That's an all-time high. So if you've ever bought this stock, you're definitely up on your position. Is there any news? Bloom Energy awards $50 million supply contract. Hey, that's good news, I think. Sales are up 20%. They're narrowing their losses. Actually, if you average out the 4 quarters, they are technically making money every quarter. So the losses are narrowing at a nice rate. They probably are super momentum-y right now because the whole market is. The market's at all-time highs today. Yeah, $15 billion company. Interesting. I don't know. I wouldn't really touch on one right here at this price at all-time highs, but nice. PSKY. What up, Scorpion? Oh, yeah, Skydance. I think this company just bought Warner Bros. Discovery. Actually, let me pull this up real quick. If I go to my all stocks here. Yeah, check this out. Warner Bros. Discovery, which owns like Cartoon Network and stuff, a bunch of different. They're up 30% today because Paramount Skydance is basically acquiring them. And they just acquired, I don't know, but basically they have this streaming service, a direct DTC, direct-to-consumer streaming businesses, basically a competitor to Netflix. And this is what has been leading to a lot of their growth, this streaming service. So, and the merger just went through, so it's really interesting. And they're doing more moves. So anyway, what do you think about the Fubo Disney deal? Hey, yeah, it's kind of... I own Disney, by the way. I do have interest in that. I'd stay away from Fubo stock. I wouldn't touch Fubo stock. If I had to pick one, I'd probably just buy Disney. I'm up 1% on the day from my Disney. That's pretty good. All right. Yeah, Open Door went crazy. Yeah. Hey, you know what? We'll pull up Open Door real quick just because it's so momentum-y right here. Up 77% on the day. If you're wondering what Open Door does, they just... flip houses, sell houses, and they're really begging for a lower rate environment because check out what happened in 2022 in the zero interest rate environment. These growth rates are nuts. They were making 4 to 5 billion of revenue a quarter, but then look what happened shortly after, a year after, as rates hiked up to 5% very quickly. The sales plummeted. They're very interest rate sensitive. The sales fell 70%, 62%, like the sales collapsed. But they're really hoping because there's a 90% chance of a rate cut next month. There's too much momentum there. I wouldn't touch that one. They're still losing net income every quarter. Um, I have a class where we're only trading stocks. I have a 50K funded. What do you recommend? Well, they're probably going to compare it to the market. So first off, I would just buy the S&P 500. How are we doing today? And where is the S&P 500? Is that a new intraday high right now? The SPY right now is at an all-time high. So first off, buying anything, you're going to be paying some pretty high valuations just because the S&P literally is at an all-time high right now. And so is my portfolio. Yo, congrats if you own stocks. You're probably having a great day today. Yo, my Roth IRA is up 2.3 thanks to Innodata. Innodata is going crazy. All right, so what do you think about a Duro? It's a recycle. Yeah, hey, if you got a stock you're going to look at, let me know with the ticker symbol. I'm reading both chats, the YouTube and the TikTok. Eloic said Merck stock. Yeah, let's do Merck, MRK. So, sorry, my Wi-Fi is a little slow right now. By the way, if you want to hit the follow button, we go live every single day, and I sell nothing. I have no course, book, WhatsApp, Telegram. I sell nothing. So watch out for people impersonating me. This is my only account. My only other account is my YouTube channel. My YouTube channel is called Nathan Robert. That's the best way to support me. Just subscribe to my YouTube channel, turn on notifications. I also stream on there. So if you missed anything or want to replay the stream, I'm also streaming on YouTube. You can replay it. Hey, see you later, Julianne. I appreciate that. Yeah, I'm about to end the stream. I've been streaming for over 2 hours now. So we'll look at a couple more stocks. I appreciate that. So yeah, check out the revenue on Merck. I think this is why the stock has kind of been flat for a while. Like if we look at it from a year ago, this was a $125 stock. Now it's $85. I think it's because the growth has stalled. The growth is actually negative. Revenue's down 2% year over year. The net income's down by 19, which means they actually lost their margins a little bit. Still really good margins, 20 to 30% margins. And they're making a lot of money. $4 to $5 billion of after-tax net income a quarter. Let's go see how much their dividend costs. So they're making $4 to $5 billion in net income a quarter, and the dividend only cost $2 billion. Since they have so much leftover money, they're spending, that's crazy, nearly $1 billion on buybacks every quarter. So if we look at the net income, fell by 19% year over year, but net income per share is only down by 17. So they bought back 2% of the shares. On top of buying back 2% of the entire company, you get a 3.8% dividend yield, and they raise the dividend every year. So they're a very just shareholder-friendly company. Pharmaceutical play, you get buybacks, dividends. They don't really expect them to outperform the market in the long run. Sales are negative year over year, kind of lost the growth. But hey, what up, Sharkwater? Toss one out there. Oh, dude, that's Lamb Research. I love Lamb Research, yo. Oh, wow. All-time high today on Lamb Research. Dang, I should have bought them. Oh, the market closes in 3 minutes. Yo, we'll watch the market close as well. I didn't even realize that. Or in exactly 2 minutes, the market closes. So here's Lamb Research. This is a semiconductor company as well. Or wait, let's see. Manufacturing and servicing of wafer semiconductor equipment. Pretty cool. Let's see. They reported earnings and they had a nice beat. So the orange line's what the analysts expected. They beat on revenue. They beat very nicely on net income and on EBITDA. So it was a triple beat quarter. I'm not surprised they're at all-time highs. The growth is huge. The sales are up 33% after growing 21. Ooh, wait, look at that. So the sales are up 33, but the profits are up by 69, which means they're expanding their margins. The margin went from 26 to 33. That's insane. I believe that this stock is at all-time highs. They deserve it. Also, you get a near 1% dividend yield with Lamb Research, so pretty cool. Yeah, hey, no, I appreciate you, John. Thanks for always showing up. I do really appreciate that. So, yeah, let's go watch the market close here. How'd y'all portfolio do today? Yeah, before you go, if you wanted to follow button, we go live every day, sometimes twice a day. And we're up 1.21% on the day. Here's a quick portfolio update. We're up 16.6% year to date. Here's my total percent change in every stock. So we are green on every single stock in here by a good chunk. That's good news. The S&P is up 0.9%. We're going to be closing at a new all-time high on the S&P 500. Tesla's up 6%. Some of these other names are doing great as well. Apple's up. Here's this portfolio. This is my buy and hold portfolio, or that's what I call it, because once I buy a stock in here, I try not to ever sell it. Try and just hold it forever. And like Cover Systems, I haven't taken a single share of profit on them ever. I haven't taken a single share of profit on Powell Industries on them or any of these stocks. Also, here is my Webull portfolio. This is my growthy kind of risk on account. We're up 17% all time in here, up 1.14% on the day. Here's my best performing stocks. We're up crazy on Reddit. My biggest regret is selling a lot of these great companies, or selling most of my position, like Robinhood. I sold most of my position, like over 50 shares of Robinhood, at like a 300% increase, but now it's up 750. So I missed out on so much money, but it's all right. You can't go broke taking profits, but don't always trim your flowers to plant weeds, or something like that. The saying goes something like that. I forget how it goes, but anyway, yeah. SoFi's up crazy. Another one I regret selling. AMD's, we got Supermicro. I don't love Supermicro at this price. T-Rowe, Calmain's a cool stock. We are down on some like UiPath, Zoom, CPRX. These stocks are too cheap to sell, but yeah, that's the complete total portfolio update. So yeah, hey, best way to support me, again, if you want to, I sell nothing, I have no course, book, Discord, WhatsApp, Telegram. The best way to support me is to subscribe to my YouTube channel. It's called Nathan Robert. Turn on notifications too, so it'll notify you every time I stream. I stream once a day, sometimes twice a day, but every single day. And if you missed it, you can replay it on the YouTube channel or something. But yeah, I hope you guys have a great rest of your day. I've been live for over 2 hours. My head hurts. Hey, Jaden, thanks for subscribing, bro. You know what? I'm gonna give you a follow on TikTok. I don't usually follow people, so watch out for people impersonating me. If you hit the follow button, I'll never follow you back, but you'll probably get followed by some people impersonating me. So do know I'll never follow you, DM you. I sell nothing. Watch out for people impersonating me. Hope you have a great rest of your day. See you very soon. And hey, subscribe to the YouTube channel if you want to support me. Best way to. See you later. And go leave a comment. Say you came from the TikTok stream. See you later, John. See you, Clem. May have to go walk in UK listening. Oh, hey, dang. Hey, see you later, Clem. See you later, Nemo. Where do you go to keep yourself up to date with information? I kind of use Moomoo. I use like the AI feature, but I also just like read basically the brokerages. Moomoo. For my most popular stock, I'll just click the news tab and it filters it by